Hey everyone, it's Nick with Us versus Herd. We are looking at the week ahead and we have quite a busy week. We had the Fed coming back. I'm going to go over everything right now. If you want to join our community, links are below in the description to our Discord and to our trading group on Facebook as well. But let's jump right into the UVH impact report. So coming up here, we actually have really super heavy earnings this week. We had the big tech. This week we're going to have Pfizer, AMD, Qualcomm, Peloton, Starbucks, Moderna, DraftKings, Roku, Block, which we do have the full list right here, which we do publish on our Facebook and our Discord as well. But what I really want to talk about is the Fed. So the Fed is going to be taking up, they're going to have their meeting, their 2-day meeting starting November 1st. So November 1st through November 2nd, they're going to have their meeting. Then they're going to have on November 2nd at 2 p.m. Eastern time, they're going to have the Fed announcement. And what the announcement is going to be is essentially the rate hike and future rate hikes as well as that. So that's what they're going to cover in the announcement. They're going to cover that in the Jerome Powell press conference. They're going to go over everything that's going to happen. So the market right now is pricing in another 75 basis points, but the market is also thinking, we're going to go over some charts here in a second. The market is actually also thinking that the Fed is about to pivot after some of this and kind of see if they're going to start quieting things down. How's QT going? Last week QT they did take off almost $30 billion. So we are definitely in some interesting times right now. So we're going to go over some charts and kind of show you how all that plays out. But we are going to have data on pretty heavy data on Tuesday. Then we got the ADP report on Wednesday. Thursday, jobless claims. We're coming in with all that. We're heading into November, so we're going to get all this data right now. So it's gonna get crazy. And then on Friday we have non-farm payrolls as well. So unemployment rate, that kind of thing. So you want to be mindful of the schedule, especially this week, because you don't want to be caught up in a trade where you're short or long or whatever, and you're not accounting for this, because the market is absolutely going to move on this. If you don't think the market is going to move on this, then it's kind of naive to think that. The market is definitely going to be moving on this news right here. So last week I'm going to show you the S&P. So the S&P last week, pretty strong on Friday. Really super strong. Opened at about 3,800, closed at 3,923, right at the highs here. It crossed over the 50-day moving average and the 100-day moving average, which is this white line here. I was particularly looking at the 50-day moving average because it rejected the 50-day moving average on October 26th. Then it rejected it again on October 27th. And I thought that when it retested on Friday, it was starting to have trouble right at the 50-day moving average, and it did get rejected. But then they bought it straight back up. This thing went parabolic, just crazy. And the narrative on the street is that the Fed is going to pivot, but that was the narrative, back in when we had the last rally here too. The last rally up in here back in September, rallied that the Fed was going to pivot, and then we set some new lows. We did come all the way down to 35.02 here, and then we snapped back up. That was actually a crazy day too. We don't need to go into detail there, but that was. If you guys have been trading over the last few months, we're seeing some craziness. Now, this potentially could be bottoming out here. Potentially, we did have this really nice candle down to 3,500, bought right back up, and now we're back up at 3,900. So what the Fed says this week is going to be very, very, very important. It's going to be very important. Okay, I just want to be clear. Like, if you think it's not important, you brace yourself. We're in for a mess. Now, the Nasdaq hasn't been as strong. It didn't even touch the 50-day. It has not touched the 100-day. So the S&P and the Dow have definitely been outperforming the Nasdaq. Mostly because we've been getting into some trouble with tech earnings, which we'll go over as well. So, we're right now, if it can't break, break up here, if it doesn't break the 50-day moving average, it's going to be a hard time for tech right now. We had Meta earnings and everything last week. So, it was a disaster. But real quick, before we move on to the tech earnings, tomorrow is the last day that you can actually lock in the UVH Academy for a $197 lifetime subscription. So if you want to join, starting November 1st, we're changing everything. I know that I've made quite a few announcements on it. A lot of people signed up, and I definitely appreciate you. I thank you for giving me the chance, giving me the opportunity, and trusting me with your options trading and your trading education. So, everything's going to be changing November 1st. We're going to have weekly accountability calls. We're also going to have monthly webinars. And basically what we're trying to do is create real traders. We're also launching the research lab as well, where we'll go over trades, trade ideas, and it's not to be mixed with like an alert service by any means. This is to help people basically learn how to trade and eventually go out on their own. So if you want to go to usversusherd.com, or link is below in the description. Now, moving on to, Meta cratered at 96, back up at 92, but we're going to have a super big gap here. We're at multi-year lows. I think this is the 2016 low. Let's see. This is we're back down to 2016, 2017, the 2016 low. What do we have here? Yeah, we're way below it. So let's go to 99. Yeah, we're basically, if we break 91, we're going to be looking at the 2015 low. So this thing has given back everything over the last, it's crazy to think, everything over the last 7 years for the most part, 6-7 years. Just crazy. I don't know exactly where this is going to go, but it is going to be a mover. So definitely, could it come back up to the gap? I will say, when everything else was rallying like a SPY, look at Apple here, Meta stayed flat the entire day Friday. It did not budge. On Friday, it did break 100, but it just fell all the way back down to 97.5. So I would say stay away from Meta for a little while. Obviously not financial advice, but letting you know what I would just be very mindful of Meta right now and where it currently is. So Amazon right now Amazon came down after earnings, came all the way down to 87.5, closed at 103, and kept on going. Had an epic bounce. Now the big thing that I will say about Amazon is you want to be careful. Is they did say like, hey, Q4 holiday season, it's going to be a mess. So I would definitely have some caution here in some of these tech stocks that have dropped a lot. Sure, you can gobble some shares up, but I would say use extreme caution, and in the money that you put in here, just know that it's going to be tied up for a little bit. Especially like Meta bulls. I'm not comparing Amazon to Meta, but if you don't think that it could happen, we're coming into some new realization now. If you were to say like a year ago, Meta is going to give up 7 years worth of gains, 6 or 7 years worth of gains in the next 12 months, you'd be like, you're crazy, man, you're wild. But we've seen Netflix, we've seen all these stocks. All these stocks down 50, 70, 80%. So this is down. Almost got cut in half on Amazon from its high of 188, where it went down to 97. It was almost a 50% drop if it held on to those pre-market lows on Friday, but it didn't. So I think that potentially you could get a nice bounce here. Risk reward is pretty low as a trading, but again, everything what throws up everything this week is going to be the Fed. Now Microsoft also is a big name that actually. They were down 6 or 7% after earnings, came down to 220, bounced back up, had an epic day on Friday, closed at 235. And if you look at the chart here, since all that was pretty much, since the 220 hit pre-market, it's not on the daily chart here, so this doesn't even show, but it bounced basically where this candle was on October 13th. So kind of notable, but if you look at Microsoft, what I don't like about Microsoft is it didn't even get above the 10-day moving average. We had this epic run, but it couldn't even get above there. Got rejected right at earnings. Earnings coincided with the 50-day moving average on Microsoft, and it couldn't even breach that. And then the next day it was like, we're headed way down. Apple, Apple with the surprise with they didn't report great earnings. Came all the way down to 136, but they just bought it. And I was saying this in the Discord is, a lot of people were shorting Apple, stuff like that. And Apple is one stock that I will not short. And the reason why is because it's basically it's been the number one stock on the planet for I don't even know how many years now, a long time. It's been the number one stock. So many people want their shares, whether it's like Warren Buffett, big hedge funds, whatever the case is, other funds, 401ks, blah, 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 right? They buy this up. And the reason why if you're thinking about heading into the recession, Apple is one of the most cash-rich brands. They can withstand the fallout over the next couple of years. So, if you're looking for safety, security, and a place to store your money, Apple's probably a pretty good idea because they have enough money to weather the storm. They're able to get out in front of this. So that's all I'm going to say. You guys trade safe this week. Again, if you want to save $1,000 on the lifetime subscription, go to usversusherd.com. Looking forward to launching the new academy this week. As always, stay safe, stay green.